Welcome everyone back to another episode of Market Talk. Today we have Kevin Dolan from AnnieMac Home Mortgage, Joe Valente from Tabatchouk Law, and my business partner Jeffrey Kalafut. Welcome everyone. Thanks for joining us today.
Morning.
Good morning. All right, the energy is high, so that's great. We're off to a great start. So the real estate market is doing well. That's nice. Um, so let's start off, Kev. What are you seeing in the mortgage world, and what are you seeing in regards to buyers and stuff right now?
Yeah, we actually have a lot going on. Definitely been pretty active the last few weeks. I think if you are seeing the media, right, we're seeing and hearing about the Fed now making some cuts. And there's about a 93% on average belief that in September we will see a 25 basis point cut. And then beyond that, it gets a little bit wonky because now the stats are sort of all over the place. So I just pulled some. So Goldman Sachs believes there's going to be three more this year, September, October, and December, all at a quarter each. Goldman Sachs, or I'm sorry, JP Morgan believes there's going to be four more cuts. And then, Morgan Stanley believes there's not going to be any cuts, but then there's going to be seven next year. So, I think if you add that all together, most people do believe that we will start to see a trend of some rate cuts for sure. Going into the end of this year into next year. So
Right.
so that's definitely showing signs of a slowing economy. The Fed obviously believing that inflation is going to start to come down, to their target of 2%. But really good kind of news on the rate front. We now are seeing a national average somewhere in the mid sixes to mid, 6.5 to 6.7 in that range, depending on, people's credit profiles and how much cost that they're going to incur for their mortgage rate. But, that's pretty significant in the grand scheme of things because it's now, it's sort of sparking some optimism
Hmm.
for buyers. And if you want, I can kind of give you a little bit of an idea. I think a lot of people always want to know, right? Like how is that happening? What's causing the rates to go down? There's really some main factors to consider there. Softening economic data, right? So that's basically showing the primary one is jobs, right? It's jobs related. Last Friday, which is the first Friday of the month, every month, the BLS, which is the Bureau of Labor Statistics, comes out with a jobs report, right? So it reports things like new job creation, unemployment data, and so forth. Really, a big headline that was made there was that there was multiple revisions from the last few months. And so if you think about the job of this organization for the government is to put this data together. They really just missed, and they
Hmm.
missed by a lot. The unfortunate part is that, during the last 3 months, because of this, the average interest rate probably would have been down about a quarter of a percent. So not a good thing for people that had to buy during that time off the heels of literally just mistakes out
Hmm.
of this organization. So what happened on August 1st? Trump fired the commissioner. So that person has no longer employed. And for good reason. If you think about like a CEO or the head of any company that, is in charge of making sure that there's accuracy and quality in their product or service, whatever it might be, someone's got to be held accountable. So, sort of not really up for debate because it happened already, but I think a lot of people were happy to see that because the data integrity was just compromised this year for sure in that department.
Yeah.
Uh,
Kev, so I know it's hard to make a prediction, but say all these, say three rate drops, say the other company says four rate drops next year. Like, how do you think the market would react to that?
the one thing we spend a lot of time in my world, almost like a broken record, trying to explain to the consumer that the Fed's fund rate is not a mortgage rate. There's
Hmm.
no direct correlation. So, I mean, literally, we will get dozens of phone calls from our clients. Fed cut rates a quarter, and then they say, "Oh, so my mortgage rate went down a quarter," right? So it's
Yeah.
not a direct correlation, but it is again, it's showing the signs of the slowing economy, and it's all inflation based, right? So the other pieces of that. Let me just kind of take some of my notes here. Um, it's the 10-year treasury starts to go down, and that also is really the main driver of rates, and that comes off the heels of poor, economic data coming out as
Mhm.
well. Um, and that really uh, is one of those things where that's what's going to drive the rates down. The Fed cutting rates is all going to influence that, the economy is slowing.
Mhm.
And that's really what's gonna drive it. So, um, the future with the anticipation of the Fed cutting more also will drive lower rates. So these are all things that are heading in the right direction. Just last week, refinance business surged about 25%.
Hmm.
So year over year that's a pretty staggering number. So it's
Yeah.
giving good opportunity for people that bought in the last few years to sort of, right size their mortgage rates and get themselves into a more affordable payment as well. So that's a good thing.
Yeah. Good. Jeff, what are you seeing on boots on the ground right now?
Right now, I mean, I have a lot of new buyers kind of entering the buyer pool, and they've kind of been hanging in the background a little bit, watching how things are going. So when you have that conversation with them about, hey, the rates just dropped, it's the lowest they've been this year. We hope maybe they'll come down a little bit more, maybe they won't, but we're still below that 30-year average. 6.5 sounds a hell of a lot better than 7.5, you
Hmm.
know. And it's just I feel like, inventory is just starting. We did have a surge of inventory coming into the summer, no
Yeah.
doubt. We saw, I want to say it was about a 25% increase in inventory over last year
I pulled the numbers this morning. Statewide you're very close. It's 17.4% year over year
for the
right
for
now.
state. Yeah, that's
Yeah.
that's that's
Statewide.
a, that's a very significant number. It
Yeah.
might not seem like a lot to some people, but when you're considering where we're coming from,
Yeah.
it has had an impact. I also feel like a lot of buyers aren't pulling the trigger right away. There's definitely a slowdown in their decision making.
Hmm.
So
Yep.
in the past, where you'd go see a house and you're making a decision right then and there. You know it's going to be multiple offers. You know that the crunches that you like. It's time. You got to make a decision. They're
Yeah.
not doing that. They're
Yeah.
taking a step back. They're evaluating their options, and
Yep.
they're definitely And I'm seeing even on listings where people are showing it. Yeah, great feedback, great feedback. No offer yet. Where where's the offer? You know.
Yep.
You'll be
Are you
hearing
guys
from me.
seeing an
No, I
increase
won't.
of Jeff, just while you're on that topic, I just more curious now, are you seeing the average days on the market, kind of increase now? Is
Yes.
that
Big
pretty much
time.
Yep.
a solid thing?
Yeah,
Yep.
definitely.
What I've realized is that the demand is still there. Like if the home is in a right spot, good street, good sidewalks, good curb appeal,
Yep.
it's gone. Con the buyers have been more looking at condition now. They're not overlooking as much as they used to. So they like what Jeff is saying, they're kind of hitting the pause button. If it's on a busy street, it's going to sit for a little bit. It's there.
Listen, I mean, you think about the past few years,
Yeah.
right? I hate to say it this way, but I'm just going to come out and call it what it is. We've sold some really crappy houses at times for a
Hmm.
lot of money,
Hmm.
right? Those houses today, if they were listed today, wouldn't be selling, and they certainly wouldn't be selling as high as they are and as
Yeah.
fast as they did.
Yeah.
That crazy frenzy is starting to fade away a little bit. But like Jay said, I agree with 100%. Specific homes, good curb appeal, presented the right way, you're still going to list at multiple offers.
Yeah.
Now, priced appropriately, more so than I think now than ever before. You have to nail your price down.
Hmm.
You can't like we've all seen it the past few years where you could literally put it on for $1 and it's gonna go where it's gonna go. But
Hmm.
right now, because the way that the decision making is, like you really have to, in my opinion, price it right at where you're very comfortable taking it in hopes that you draw enough attention in and push those numbers up a little bit on the
Yeah.
selling side.
Yeah. Because I mean, we've had almost in our area more than a 5% appreciation over year.
Right?
So if a seller gets a little bit too greedy and pushes it way over that, even what it's already appreciated, they're
Right.
they're going to be sitting.
Yeah, and
So
and and I feel like we've been saying this for the past couple of years. When are we going to reach that peak? When are we going to hit that plateau?
yeah.
I feel like we're finally hitting that plateau, generally, right?
Hmm.
The further west we go, like we've seen it with some of the listings further west, like they're sitting. They're
Yeah.
they're not getting the attention they did, a year ago.
Mhm.
6 months ago, even,
Yeah.
like some people, it's hard to explain to the sellers because that whole dynamic has shifted a little bit.
Yeah.
But again, the right town, the right house, the right price point, it's still going to go pretty quickly. But what was taking a week might take 2 or 3 or 4 now,
Yeah. And a lot of the companies pulled back from the work from home, so the western reach of homes has slowed down as well,
Right. Yeah.
because of that.
Well, and on the flip side, we're seeing some of those people actually put their homes on the market because they have to go back east.
East. Yeah.
Or I know of somebody who literally they were remote working for the government, had to move back to DC. They're living
Hmm.
in Morris County, so
Yeah.
that relocation happens.
Yeah, I
Yep.
mean, I think it'll be interesting to see. Redfin just reported Jersey year over year is a 4.4 appreciation, but that's less than half of the year prior, which was a double-digit number, right? So that's a huge decrease, even though there's still a good appreciation factor there. I think that that's just leading towards a more neutral, natural buyer seller even kind of market. If we hopefully can get there, and it'll be interesting to see when rates go down. If we do kind of get that leveling out of inventory based on sellers agreeing to move now that they're not going to be buying in a higher rate market, but does that also get offset by a higher buyer demand,
Right.
with more affordability? So
Yeah.
that's sort of $100,000 question, right? Because we're going to
Right.
kind of
That's
see how that
that
one
that is
goes.
it right there, Kev. Because I
Yeah.
had that conversation yesterday with a client of ours, and I'm like, right now, like I would love to see a drop in rates. Everybody wants more to see more, right? But if they drop too quickly, we're gonna see it. It's gonna get crazier,
Hmm.
right? Like
Yeah.
I don't think it's gonna be overall beneficial to the market and to the consumer.
Yeah.
Where we're at right now. I mean, like you look at July's numbers. Like we had more listings, but we were down 5% in sales in July compared to last year.
Hmm.
So when you're looking, it's a small difference, but it's a difference and it's down. And I think
Yeah.
we're starting to see the seasonality of things start to actually hit again. I noticed, this year, coming into the summer where, you know, going into Memorial Day weekend, right? Some listings. I chose, talking to my clients, not to have open houses those weekends. I'm let's just see where it goes.
Hmm.
And I saw that people would have the open houses, and I followed up with a lot of those agents, and some were very popular. Others, it was crickets. They got nothing. You know. So now you're seeing that I think we saw that surge after Memorial Day. I think there was a pause through the 4th of July weekend a little bit. And
Yeah.
then, now we're hitting, mid-August, school starting next month or this month for some kids. And, I expect to see a little bit of a surge again as we hit that early fall and then fades away again into the end of the year. So I
Hmm.
feel like we're getting more into that normal type of a market.
Yeah. Joe, what are you seeing? Is it an all-out war during the transactions, or is it settling down a little bit? What are you seeing, man?
Well, Jeff, you took all my talking points right out in the last 30 seconds, man. You're
Ah,
killing me.
way to go, Jeff.
And that's the
Sorry.
biggest thing I'm seeing. We saw probably our first spring market return since pre-COVID,
Hmm.
where you have like your busy spring market surge and then seasonality based on how the summer patterns go, people going away, like Jeff said, pretty hot and heavy from the spring all the way through 4th of July. Actually, even mid to late July this year. Then things start to settle down. A big going away period's early August. It's always a slow period, and then people get prepped for school. Then you have a fall resurgence, and then same thing. So, what Jeff said, I think, is the big point. I think also what we're seeing is kind of a fake turn to buyer's market.
Yep.
I don't think it really is. I think people are just waiting to see what the rates do.
Yeah.
There's all this talk of it dropping. It's going to be, if there's any significant drop, it's going to be chaos.
Yeah.
And like you said, buyers aren't really going to get the true value of that rate drop because they're going to, the home prices are going to go up again in bidding wars.
Right.
Yeah.
So a savvy buyer, if the right house is there, should be acting now.
Yeah.
And then refi if the rates do in fact drop. I mean, that should be your play. But,
Yeah.
the majority of people are going to get hot and heavy when things get hot and heavy. That's just how the world works,
Yeah. The only way to counterbalance that is if interest rates, mortgage rates do drop, there will be that first hit of prices increasing, but it's also, in my opinion, it's going to unleash an inventory of listings
Inventory.
as well.
The inventory would help to counterbalance, the
Yeah.
competitiveness because you have more availability.
Yeah,
Um,
there will be that delay for that to actually take action or for both to even out. But yeah, and Kev, you better buckle up, man, because
Well, yeah, I would say to you, I agree 100%. That Fast and Furious does, you want to talk about getting crazy. Well, you can sit at my desk for a month when that happens. It is just it's a disruption, because you get people that lock in here, rates move here quickly, and now you got to, everything gets shuffled up, and it does become a little bit distracting for a lot of people. But I will tell you that based on forecasts from, they vary, but they're the most of the forecasts don't see a five coming anytime soon. So just so you know, that would be really the disruption. I think if we got like
yeah.
slammed into the fives quickly, that would do a lot of what we're talking about. But most are seeing interest rates forecasted to be in the low sixes by the end of 2026, and a very kind of slow pattern down from there. So I think that's going to be healthy for our market. And just, a lot of people ask too, like, what does that actually mean, right? Like, so a $500,000 loan amount, when a rate is say 7%, that goes to 6.25, right? So 0.75% reduction is about $250 a month for someone's mortgage payment. So,
Hmm.
that's substantial. That affordability change either just makes it easier for them to buy, but what we don't want, right, is to make it easier for you to then go higher and even more sort of aggressive and create that that scenario. I think one thing that we got to kind of put down the river a little bit and know that we're going to get to it eventually is that we will probably get back to having some appraisal challenges.
Mm.
Because the aggression now, right? We're already talking about we've split the appreciation year over year in half and then some, right?
Right.
And so the mindset of the consumer, mindset of the real estate agent too, is a lot of times still kind of that real fast-paced aggressiveness where now we know the market is not keeping up with that pace.
Hmm.
And that number is likely to decrease a little bit even. Now rates came down quickly. That would probably throw that theory out, but little shameless plug, we have some new programs too that are allowing for, certification of value up front. So that's kind of coming into the picture. But, I think that that's something that we all need to take a closer look at, making sure that we don't allow for transactions to still maintain that crazy, I'm just going to do whatever it takes to win, but all built on sand if the appraised value is not going to support it, right? And so I think that's a topic for another day, but we got to watch that closely because we're already seeing the market appreciation drop enough to think that could be a concern coming forward.
Yeah. It's going to be interesting. I mean, obviously, New Jersey as well is a unique landscape in real estate. I mean, we look at what's happening in Florida, even Myrtle Beach, North, and stuff like that, where the inventory is still high, builders are still building, and then even the nuances with New Jersey, like we have to see what happens with Monmouth County at Netflix moving in as well.
Mhm.
Is Monmouth County just going to explode on property value and appreciation rates as well? So, yeah,
Yeah.
there's a lot of unknown
Yeah, a lot
happening.
of different dynamics.
Yeah.
It's going to be fun regardless.
It's fun.
Buckle up.
it always is. It always is.
Always is. But seeing an increase in inventory obviously is good. It is hitting the pause button a little bit on buyers. They're a little bit more, attention to detail on some of the houses and not overlooking as much. So we are seeing a little bit of a stutter step in regards to that. But yeah, you guys want to add anything else?
Yeah, I just
think
had one. Sorry, Joe, go ahead.
Go ahead, Kevin. Yes.
Yeah, last I had on my bullet points was that we're seeing an increase of that non-QM business. We've talked about this earlier in the year. It's up about 8% now year over year, and that's a pretty significant number to think about. The fact that the market has really accepted these non-traditional programs that are not to traditional tax returns and pay stubs to qualify for a mortgage. Things like bank statements are being used heavily now. The rental income for an investor to buy a property, to use the rental income to qualify. The market's really seeing these as very viable ways to do a transaction, both from the real estate agent side and the consumer side are really now aligned with this being a really good runway to do a lot of business, and especially in the investor space. So do expect to see that number really grow. We've seen numbers anticipated upwards of like 18% of annual business being in that non-conforming space. So definitely something to look out for. If there's realtors that are listening to this, that would be an area I would say, definitely you need those tools in your belt, and you got to sharpen up the knowledge of how those programs work, because you will see them, and they're coming hot and heavy, and then the production behind it is supporting that growth big time. So
Yeah, that's great. That's great. Joe, what were you gonna say?
I was just gonna, put a bow on it and say, this cycle of real estate, like this 2025 so far, has probably been the most normal in terms of patterns, seasonality, and it's probably a good thing. It's a healthy return to real estate. Whenever you have anomalies, it's great for that short spurt.
Yep.
Business is great, but it always turns on its head and creates a big problem when the dust settles. So I think entering, later parts of summer into fall, this is probably a return to the normalcy of real estate as much as you can have in that fashion.
Hopefully, man. We get beat up every day, so we could take a break for sure.
Listen, nothing's been easy lately either.
No,
That's the thing. Like, that's where you see like the change too, because for the longest time, like, it was just like writing an offer, getting it accepted, going through. There's no issues because you need to get the house, so you're just kind of letting things go. Now, buyers are pushing back on inspections.
yeah.
They're definitely not handling things as they did a year ago.
Sellers are definitely losing leverage on inspections, and attorney review time you're at, the 1 and 2 day attorney review periods, less and less than that. You're seeing that extend out as well. So those are two big signs for sure.
Yeah.
Mm-hmm.
So we will
It's
see.
going to be interesting to see how this year ends up.
It is. I mean, there's so many variables that are in play that, everything that we think in the direction it's going, it completely changed in 30 days.
We have a local elections coming up. I mean, things.
We didn't even talk about the mansion tax.
Oh yeah.
God.
That
Another
could be a whole
topic,
nother
another day.
video.
A whole other video, the mansion tax. Yeah, that's
We should say the mansion tax, because $1 million doesn't get you a mansion in New Jersey anymore. The whole thing is a bunch of crap.
yeah, man.
It's in.
It's
I
the
don't
new
know.
it's the New Jersey pocket extra cash tax for the elected
I'd
officials.
love to know where it all goes.
Yeah.
Love to know where it all goes.
Yeah, that's that was a hit, man. That was a flip of a coin. Oh, we're gonna, on the buyers. Nope, now it's on the sellers, and then we're gonna raise it as well.
So sorry.
Yeah, so sorry.
That's the crazy part to me. And the one of the worst parts of that, in my opinion, was that the houses that were already like on the market, right? Like,
Yeah.
you've already structured your price a certain way. You put things out there a certain way, and the fees structure is going to be a certain way, and all of a sudden the state comes in and flips it on its head, and like, wait a minute, now we're listed, like, we might have to pull off, increase our price a little bit to account for other things. It's a mess.
Yeah.
And again, the mismanagement of this state's money is just ridiculous. So I don't.
Yeah.
We can go on a full tangent on this for a whole nother hour.
We can.
Yeah. And we wouldn't change anything, Oh, it's crazy, man. It's crazy. But gentlemen, thank you for joining us. Look forward to next month. Let's hopefully some good things come and nothing too crazy. So
Absolutely.
Likewise. Thank you all.
awesome, guys. Thank
Enjoy
you.
the rest of the summer, everyone.
You too.
Take care.
Take care.